Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 40 to 50 minutes, I'm going to be your host as I will be taking you on a trading journey where we shall be reviewing our current market position, current trading positions, and of course, see how we can use the historical data we find on the charts to guide our trading activities for today and for the second half of this week. Since the beginning of this week, we have been monitoring three financial instruments which we included on our watch list for this week, and that these are the US All Spot, the GBPUSD, which we newly introduced after about 3-4 weeks of not trading this asset, and of course, my favorite amongst them all, which is the XAUUSD, popularly known as the gold spot. This week so far has been a little bit, or let me say fairly okay, as we did had some profit on some of the assets we're looking at. We took some trades, and due to the expectations of the US CPI data coming up later today, and of course, the uncertainty surrounding the Federal Reserve interest rate decision, we see that the market has not really gained a lot of traction in that regard, as we can see price still coming back into our entry area. And I'm of the opinion that today we may likely see a sense of direction today, following the release of the US CPI, which will be coming up later today. And the CPI data happens to be one of the major highlight for this week, and everyone in the market is looking forward to it. Now, one of the factors that has been influencing this expectation is the indecisive nature of Federal Reserve's decisions on whether to keep interest rate higher for an extended period of time, or probably cut interest rate as they have projected since last year. Now, a couple of weeks ago, the Fed chairman, Jerome Powell, emphasized that there will be three rate cuts for this year, that is 75 basis point cut for this year. However, the data coming in from the United States has emphasized a resilient economy. And last week we saw the NFP data, which came in beyond market expectations, further emphasizing the resilient nature of the US economy. And this, of course, has incited idea among market participants that we might likely be seeing interest rate kept higher for an extended period of time. And of course, the federal officials have also stated that before interest rate can be cut, we need to see economic data that supports inflation is gradually reducing in the economy. But at this point in time, we still do not have any. So everyone is looking forward to the CPI data today to see what will be happening. If the CPI data comes in higher than expected, we may likely see a surge in the US dollar, which may affect the current direction where price action is. And if it comes in lower than expected, then we may likely see the dollar continue to drop. But all is subjected to how the market participant will be reacting to this event. So today we are going to be diving into the current market structure to see how we can strategically position ourselves for any potential opportunity that the market will present to us, and have done a comprehensive analysis on all of these assets. And in fact, I'm excited to share with you insightful and simple trading setups that we will be using to manage our trades for today. So I encourage you to stay tuned in, grab your favorite beverages, biscuits, what have you, so you don't miss out on any of the valuable ideas we will be deliberating on today. For those of you who are joining us for the first time, because I know there will be newcomers in the house, I'm always excited. I'm very, very excited to have newcomers in the house. And I know you will be wondering, what is it that we're doing here on the Forex Morning Mastery, or what is this session all about? Well, following my weekend videos, which I usually share, giving an insight into how our plans will be like for the new week, the Forex Morning Mastery was born out of the necessity to do follow-up details on this asset 3 times in a week. So the first one comes on Monday, Wednesdays, and of course Fridays. And as technical traders, we usually gather here every day as a community to engage in follow-ups and reviews of our current trading positions in preparation of the London and New York session. So my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you in enhancing your own trading decisions and strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the market sentiments today. And to do this, we usually look at the economic calendar, where we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any move prior, during, and even after this economic event. Now, today happens to be one of the most busiest day for this week, and is a day where everyone is looking forward to what is likely going to come out today. Now, one of the major highlights for this week is the Consumer Price Index, which will be coming up in exactly 3 hours from now. And for those of you who do not know what the Consumer Price Index is, well, to simply put, this is a measure that examines the average change in prices paid by consumers for goods and services in the last 30 days. Now, a higher than expected CPI can lead to concerns about inflation, impacting market sentiment, as it may prompt expectations of tighter monetary policy controls to rising prices. So this is one event everyone will be looking forward to, and of course the Feds will also be looking forward to it to decide what their interest rate trajectory is going to be for this year. Will they follow through with their interest rate cut for this year, or are we going to be seeing interest rate kept higher for an extended period of time? So now, if we look at the previous data here, the conventional one is the year-on-year and the month-on-month, which for the month of February came in at 0.4% and 3.2% respectively. Now, based on what is on ground right now, economists are projecting that we may likely see a 0.3% and 3.4% from this data today. So this is a little bit higher than the previous data, so we're still looking forward to see what the actual data will be. And like I said earlier, if the data comes in higher than expected, we are likely going to see a surge in the US dollar, while if the data comes in below expectations, we're likely going to see the dollar continue to drop to the downside. Then moving on, we are looking forward to some other events later today. We have Bowman's speech, who is a Fed official, and of course is she is the governor on the Federal Reserve Board, and she's also as a community bank seat on the Fed's board too as well. So whatever she says today is going to be carrying a lot of weight. So I would encourage us all to mark the timing of this event too as well. Then we also have Goolsby too, who is the President and Chief Executive Officer of the 7th District Federal Reserve Bank of Chicago. So these guys will be having a speech. I said these guys, well, these officials will be having a speech later today, and of course whatever they will be saying will be giving us an insight into the economic outlook of the United States, monetary policy decisions, and of course interest rate decisions too, as insight into potential interest rate decisions too as well. And of course market participants will be monitoring their rhetorics to dissect and see what is likely going to be happening in the nearest future. Then later on today, we will be looking forward to the publication of the FOMC minute. Well, this is another important document which provides us with an insight into the discussions and decisions made by the Federal Reserve regarding monetary policy, including interest rates. So this meeting happened last month, so they will be publishing the minute of the meeting, which will give us a detailed highlight of what really happened, the votes by the Federal Monetary Policy members, and a lot of insight into that, which will also give us clues into what may likely happen as regards to the interest rate decisions. Then we're also going to be looking at the monthly budget statement, which is still in deficit anyways, but if we look at the previous month, it came in at a deficit of $296 billion, and expectations are that it may jump up a little bit to about a deficit of $197 billion. So these are the high impactful events we will be looking forward to today. And as technical traders, we do understand that the anticipation of this event has a way of influencing the behavioral patterns of market participants in this market, which will obviously reflect on the chart as price action. So what we are going to be doing today, as always, is to sniff through the current market dynamics to look out for patterns and structures that we shall be using to guide our decisions for today. So with that being said, here we shall be diving right into the business, and as usual, the first asset we are going to be taking for today is going to be the USOILSPOT. Now on the USOILSPOT, since the week began, we have been buying this asset. I think we had a couple of buy positions during the first trading day of the week, and it lasted for about 24 hours thereabout before Tuesday's trading session. We begin to see a decline in the momentum, taking us out of all those buy positions with a small loss. Remember, the first position came into break even, while the second position went into a loss. And one thing you will notice here is that price action has been finding buy pressure above that area between the $84.70 level and the $84.15 area, to emphasize that this area may be a strong demand zone for market participants. As you will see, every attempt by the sellers to break through this structure since the beginning of the week has been met with strong resistance from the buyers. Now, will this serve as a strong platform to guide our bullish momentum for the later part of the week? Well, we need to understand what is really going on behind the scenes as well. Now, why is price finding it difficult to continue the momentum, and what are the possibilities that the bullish momentum will continue, and what are the chances that sellers may likely successfully break through that demand zone today? Now, as everyone looks forward to the CPI report and FOMC minute for insight into inflation status and the Fed's monetary policy direction, it's important to also note that the bearish momentum we are seeing so far at the last 24-48 hours is as a result of an increased supply. Now, yesterday we saw the report from the American Petroleum Institute, that is API, which reported that there was a larger than expected buildup on US crude inventories. Now, we saw an increase of about 3 million barrels, which as against the previous week, which was at about 2.2 million barrels. So it tells us here that the supply increased, that is, they had a larger than expected stockpile. So what this simply means is that there is not enough demand to eat into the supply, so they were able to stock a lot of oil during the last 1 week. And this, for me, if we look at our simple economics, when there is high supply, low demand, what happens? Price tends to drop because of the availability of this commodity in the market, and this has resulted into this bearish traction we saw in the last 36 hours. However, in as much as the market is doing this bearish move due to this report, I still think that some other factors also influence the bearish momentum. One of which was at the beginning of the week, remember, we had of the Israeli Prime Minister saying that they will be withdrawing military from the Gaza Strip, which influenced the tone down in the escalation within that area, giving a lot of market participants the idea that we might be seeing inflow of oil from that particular area. So this led into some profit-taking activities at the beginning of the week, resulting into the structure we are seeing on the chart right now. However, there are some other factors behind the scenes which obviously has been supporting the ascent of oil prices, and it appears to still suffice as at this morning. Yesterday evening, we heard of the leader of Iran's Revolutionary Guard Navy regarding potential closure of the Strait of Hormuz, which is an area that oil supply vessels passes. I think about 1/5 of the world's total oil consumption passes through the strait, and they're planning to close this in retaliation to the Israeli attack on the Iranian embassy in Syria. So if this happens, well, this is going to be affecting oil supply from that area and hereby increasing the demand for oil. Now, the Russian-Ukraine war is still going on. We saw how the Ukrainian drones affected about 15% of the oil resources of Russia, which you know how Russia is considered to be one of the major suppliers of oil in the world, and this of course has dented into the supply demand too. So if we take all these market dynamics into consideration, the possibilities of price climbing up is still looking very visible. And if we look at it from a technical standpoint, having a demand zone around this area, and you will see that since, if we go back to last week Tuesday, you will see how that same area has been serving as a strong demand zone for market participants. As soon as price comes into this area, we see how buyers take over to push price to the upside. And the same thing is happening right here this week. Look at the beginning of the week, we saw buy pressure from this area, and in fact the last 12 hours has seen price action continue to find buy pressure. So I'm of the opinion that with this current structure, we shall be looking out for opportunities to buy this asset. Now, I have the multiple levels we used on Monday still very much intact on the chart, as we have the $85.35 level, where we shall be looking out for more opportunities to buy here. And then we have the $85.75 area, and of course the $87 level, where if price breaks out of the structure, we shall be looking out for more buying opportunities in this market. So I personally do have a buy stop order around that area to maximize the potential of this bullish move. And of course, you know, as long as price still remains above a temporary demand zone, it doesn't make any sense for us to consider selling this asset at all. However, in as much as things are looking bullish at this point in time, you know how we do it in this community. We cannot ignore the potentials that sellers could also come into as well. And what are the conditions that we shall be looking out for to sell this asset? Well, for me, I would rather want to see price action drop below this demand zone at the $84.50 level. In fact, a breakdown retest of that structure would be a beautiful opportunity for us to join a decline to the downside. So we are not going to be selling unless price action takes out this demand zone, and if it does, we want to be joining that bearish move to the ups to the downside. And we have the $85.35 level to continue an uptrend if price action ever breaks out of the structure. So it's a simple structure we have here today, as our center of focus is going to be between the $85.35 level and the $84.50 area, where depending on the direction of the breakout will give us an insight into where price action is likely going for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the USOILSPOT. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. So please stay tuned in and use that time to mark out these levels accordingly. And please remember, give the video a like. Your thumbs ups are very valuable to me, and it helps the algorithm promote the video to a wider audience of traders, and also hereby supporting the channel to grow. So thank you very much for doing so. So we'll see you on the other side. Let's see if there are any questions before we move on. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD, and we've had quite an interesting start to the week despite the uncertainty going on in the market as regards to the Federal Reserve interest rate decisions. And of course, at the end of yesterday's trading session, we were able to scoop in over 80 pips in profit after capitalizing on three buy positions during the course of this week. So let's run through what really happened at the beginning of the week that led us to buying the GBP USD. And before I even go further, I want to say here that for those of you who missed out on our top-down analysis on this asset, which we did on Monday, you do want to be visiting the Monday session so that you can have a preview into what we said and how we got to this point and the key level structures we were using to guide our decision. If you missed out, the links are right in the description box of this current video you are watching. So we are only going to be deliberating on the 1 hour time frame, which is our execution time frame. So at the beginning of the week, it was more of a range bound structure, as you will see here. The week started with price action confining within the 1.26380 level and the 1.26150 area to emphasize the prevailing uncertainty in the market at that point in time. And you know how we do it in this community. Whenever we have this kind of range bound structure, we exercise patience waiting for the market to make a decision, which will reflect on the chart in the form of either a breakdown of the support line of the range to give us an opportunity to sell, or the breakout of the resistant line of the range to give us an opportunity to buy. And considering the fact that price action was sitting above the descending trend line we identified on the higher time frame, it made a lot of sense for us to look out for buying opportunities, especially as soon as price breaks out of the resistant line. And the only condition that will make us sell is to see if there are confirmation to emphasize that sellers are going to be dictating the pace going forward. Now, something interesting happened at the beginning of the week. We saw this engulfing bullish candle break out of that structure, and in fact, if you had missed out on that opportunity, we saw how the market came back to retest the structure, giving us confirmations to continue the uptrend move. Then we also added more levels, more positions at the breakout of our key level, had the 1.265, added one more at the breakout of the 1.26645, and of course added one more at the breakout of the 1.26860 level before we were taken out of all buy positions as soon as the sell pressure resumed during the New York session yesterday. And at the end of the day, we were able to scoop in around 80 pips thereabout. And for those of us who capitalized on this opportunity, well done and kudos to you. So as of this morning, while I was trying to review the possibilities of any potential move today, I began to notice how price had been confined within a range since the later part of the New York session yesterday, struck the Asian session. As you will see, price action kept on trading within this range bound structure to emphasize the prevailing uncertainty in the market as everyone looks forward to the release of the US inflation data alongside speeches from Fed officials Bowman and Goldbees later today for fresh impetus at this juncture. Now, according to the CME Fed Watch tool, the CME Fed Watch tool is a financial gauge calculator which measures the sentiment in the market. We can see that market sentiment is anticipating a potential rate cut in June with approximately 57% probability. And this for me is a sign that the possibilities of interest rate cut in the month of June is gradually reducing compared to a higher percentage that was recorded during the previous month. And with the situation ongoing right now, it appears that with the resilient US economy at this point, it is there are higher chances that interest rate will be left higher for an extended period of time, which obviously will not favor the pound sterling. However, we saw the UK Office for Budget Responsibility, that is the OPR, which forecasted a 0.8% growth for the UK economy this year. It's just a forecast anyway, and our forecasts always come out of what is on ground actually. So, and based on what is on ground, they are projecting that the economy will grow by 0.8% for this year. Now, remember that the last before the last GDP data, we saw the UK recording a contraction in the economy for 2 consecutive times, technically putting the economy in recession at that point. So if we are seeing a forecast of about 0.8%, it's a very good signal that we may likely see a stronger GDP data from the United Kingdom, which is coming up later in the week. So we're looking forward to that. And in the meantime, as we look at the structure, I still think that the pound sterling may still see some room to increase the momentum. And if we look at things from a technical standpoint, putting aside the fundamental factors, you'll see that the structure we have here on the 1 hour time frame still support a bullish idea. Now, if we connect the series of higher lows since last week Friday, you will see that we have a beautiful ascending trend line to guide our trading decisions, at least for the second half of this week. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying this asset. So with this in mind, this morning I did say that we will continue the uptrend move at the breakout of the 1.26860, which have been triggered right now. I already have a buy position triggered, and I will be looking out for more opportunity at the breakout of the 1.271 to add more buy positions to my existing trade. So at this point, we're looking forward to more buying opportunities on the GBPUSD. So the ascending trend line here is going to be playing a major role in guiding this bullish idea. So it's a very important for us to mark it out on our chart, as we shall be using it as a reference point to guide our decisions today. However, if this ascending trend line gets broken or breached to the downside, then we will be seeing some selling opportunities to capitalize on. And in fact, if we look at the expectation for the US CPI data coming up today, economists are projecting that there is likely going to be a higher than the previous month data. There will be an expansion in that regard, which may likely influence the breakdown retest of this ascending trend line to incite a sell-off to the downside. So while we keep our bullish ideas open, we should not ignore the potentials that sellers could take over the market, and the condition that will make us sell is for price to break down that ascending trend line to the downside. So I will be giving us updates on both my TradingView and Telegram platform if we see something significant to update you with. So I will be with you on that one. So let's see how the market will play out here. So having a sell stop order below the structure makes a lot of sense. So because if price can break down that ascending trend line, we might be seeing price drop into the downside. For, as you will see, the highest point for this week is around the 1.271, and if price finds it difficult to break the previous high, we may likely be seeing a reversal setup that will incite a sell-off to the downside. And if we are lucky enough, price is slow around that ascending trend line, that is a breakdown retest of the ascending trend line, we could actually join earlier than the breakdown of the 1.26645 level to maximize the potential of that bearish move. And of course, if price continues to drop to the downside, then we will be adding more at the breakdown of the key level at the 1.265, the 1.26380, all of which have sell stop orders to maximize the bearish move to the downside. Then we have the lowest point for the week here at the 1.26150 level, all of which will be welcoming more selling opportunities for us if price ever gets into that point. So I encourage us all to mark out these very important levels, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the GBPUSD. If you have any questions or you need some further clarifications at any point in time, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. And please do not forget, if you have found this content and the session beneficial in helping you make your independent trading decisions on all of the assets we are looking at, please kindly give the video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to the wider audience of traders who may find this content beneficial. And thank you very much as you do so. And for those of you who had already clicked on the like button, thank you very much from the bottom of my heart. I really appreciate your support. And for those who are yet to like, please let's make the like tally with the number of people on board. And thank you very much as you are going to do so. All right, so let's see if we have any questions, then we will move on to the final asset on our watch list for today. See you soon, guys. All right. So, in the absence of no questions, I will assume that we are all on the same page. So, in that regard, let's move on to the final asset on our watch list for today. So the final asset we are going to be looking at today is my favorite asset amongst them all, and that is the XAUUSD, popularly known as the gold spot. And at this point, we do not have any position running at all, as we had all our buy positions closed during the New York session yesterday, during the later part of the New York session yesterday, giving us about how many pips was that? We had this buy position triggered here. We saw it move here, and about 340 pips move, and then moved our stop loss right below the 2,348 level, giving us about how many pips that is. That's about 195 pips. And of course, the second buy position did not do well as it closed at break even at that point. So for this week so far, we've had roughly about 190 pips, and for those who capitalize on this opportunity, well done to you. Kudos to you for being on standby to capitalize on this move. Now, as it is right now, what are the chances that the momentum will continue to the upside? What are the chances that the overbought conditions we have here? Remember, this is an all-time high area, the highest point price action has ever been in the gold market. And one of the things that will come to mind is, why is price of gold rising at this point? And if we use our simple economics, the reason why price of gold is rising is due to increased demand. And when there is increase in demand, scarcity suffices, and when that happens, price will definitely rise in that regard. Now, what are the factors behind the scenes that are favoring the ascent of gold prices? Well, one of these are the geopolitical tensions in the Middle East, of course, the Russian-Ukraine war, the Israel-Gaza situation, the Israel-Iran situation too, as well as also added to these intricacies at this point. Then we also have the Houthis attack to the Red Sea. Now, you know what happens when there are geopolitical tension. The appeal for safe haven assets usually increases. So safe haven assets like gold, silver, copper, and the likes will definitely rise, as major key players, investors will want to move their capitals from currency assets, which is tied to economies, into non-yielding assets, non-interest yielding assets such as the gold. Now, in this situation, another factor that is supporting the ascent of gold prices is the recent accumulation of gold reserves by China and other countries like Turkey, India, Kazakhstan's and other Eastern European nations, in fact, they've increased their buying of gold in recent time. And for me, I think that they know something that we are not knowing. That's why they keep on buying this asset. And for me, if we consider all of these factors coupled with the uncertainty surrounding the Federal Reserve interest rate decision in the United States, the path of least resistance for gold is still looking to the upside. Now, despite the fact that we're looking out for more buying opportunities in this market, we cannot ignore the overbought condition on the gold prices. Now, whenever price action reaches or tests an all-time high, there is this psychological expectations that comes with it. Now, for those who had bought the gold, bought at a very cheap price, rode the momentum all the way into this area out of fear of price coming into uncharted territory, they might want to start taking some profit off the market, which usually reflects on the chart as retracement move, choppy market conditions, and consolidation phases. And if this is going to be the case, we may likely see, and coupled with the overbought condition, we may likely see some bearish traction happen anytime soon. So while we try to keep our balance within buyers and sellers, we have simple structures on the chart that will be guiding our decisions today. So for those of us who have been with us on this chart since the beginning of this week, you will see here that we have an ascending trend line, of course, which is on our chart right now. As you will see, after connecting the series of higher lows, we have this beautiful ascending trend line. Now you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we have no business selling this asset. So we'll continue to look out for patterns and structures that support the idea of buying. Now, the only condition that will make us sell the gold is for this ascending trend line to be broken and retested. Now we have structures we are going to be using to guide these decisions today. So let's look at it closely. So if we look at what is happening here in the last 36 hours, you will see it's not up to 26 hours, 12 hours, I guess. So we'll see that price action has been confined within the peak at the $2,363.50 level and the $2,348 area to emphasize the prevailing uncertainty in this market. Well, this is not coming to us as a surprise at all, as we know that gold traders will closely monitor the release of the US Consumer Price Index data for March, and of course the FOMC minutes, which is scheduled for later today. And we know how important this event is, as they carry significant weight as to giving us an insight into the inflationary trajectory and the Fed's monetary policy path in the nearest future. So these are things that major key players will be looking forward to, and as a result of this, you can see signs that they've stepped aside from the market, waiting for further clues from this event to give us an insight of what next to do. So right now we are caught within a range bound structure right above the ascending trend line, so we need to exercise patience and wait for price action to give us that signal we are looking forward to. So as a result of this, we have the highest level at the $2,363.50 level, where we shall be looking out for new buying opportunities at the breakout retest of that structure. So we are only going to be buying if price action takes out the highest point and then continues to the upside. However, if price action drops below the ascending trend line, then we could be seeing private opportunities to join a bearish move. So we are going to be positioning ourselves below the $2,348 area to join the bearish move to the downside. So our center of focus for today is basically between the $2,363.50 level and the $2,348 area, where depending on how the market reacts to the structure or depending on how the market breaks out of the structure will determine where price is likely going for today. So I do encourage us all to mark out these levels accordingly on our chart, as we shall be needing them as a reference point to guide our independent trading decisions for today. And if price continues to drop, we have the $2,330 level below it to add more sell positions to our existing trade. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. And of course, the XAUUSD live monitoring window will continue today, 5 to 10 minutes into the New York session. So for those who do not know, the XAUUSD live window is a platform where we come together as a community to monitor real-time price action on the XAUUSD. So you want to be part of that session as we run through and manage this trade as we prepare for the US CPI and the Fed monetary, publication of the Fed meeting minutes coming up later today. So this is my simple view on the XAUUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. And if you are yet to give the video a thumbs up, please do so. This is the cheapest way you can actually support this community to grow. Give the video a thumbs up, give the video a like. It also helps the algorithm promote the video to a wider audience of traders, and thank you very much as you do so. And for those who had clicked on the like button, thank you very much. You guys are wonderful. I really appreciate you from the bottom of my heart. So let's see if we have any questions before we start rounding off on today's Forex Morning Mastery. See you on the other side, and use that time as well to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions. So I see your comment, Adelo. I did, thank you very much. I really appreciate. Thanks for the compliments, and glad to have you around with us this morning. So you're welcome to the family, and hoping to see more of you in the session. So with that being said, here I think we have come to the end of today's Forex Morning Mastery session, as there are no questions whatsoever. So I want to assume that we are all on the same page. And for those who had clicked on the like button, thank you very much. I really do appreciate. For those who are yet to, please do so. This is the cheapest way you can actually support this community to grow. So as we gear up for the US CPI data coming up later today, let's ensure that I hope we've marked out all the levels we identified on our chart. If you had marked them out on your chart, well done to you. So all we just need to do now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to mitigate against any risk on your portfolio. And for those of us who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing more of you same time on Friday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing so far this week, and of course see how to round up our trading activity for the week. So hoping to see you all then. I look forward to seeing you all then on Friday. Until then, we shall continue to you shall continue to hear from me on both my TradingView and Telegram platform as we continue to monitor price action. So it's on this note we have come to the end of the Forex Morning Mastery session. So I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.